Chronicles. Sorry for the little bit of a late start. I had to get some dinner. Best chicken salad I've ever had in my entire life, so I was pretty excited about it. But today's the last stream before I get to finally meet Chris and
Mhm.
uh, do some crazy, weird things to him that I've wanted to do.
Ew, don't do that.
Don't
Don't
do
do
that.
that.
No,
I'm
no.
sleeping with my one eye open.
Well, luckily, I'm not sleeping in the Airbnb with you. I have my own room. You guys have your own thing, but
Where
yeah,
where are you staying?
I'm staying at the Aria.
Oh, nice.
So
Okay.
Kelly's staying there. I wanted to stay on the strip just in case, I wanted to do some stuff, but you guys aren't that
Yeah.
far away. You're just an Uber drive away. So,
Yeah, yeah.
uh, but yeah, pretty excited about it, man. I haven't been to Vegas in a while. The thing that I hate most about these things, then we'll get into the discussion. But the thing I hate about most is like I love traveling,
Mhm.
but I have a lot of fear and angst. But before I get to an airport, once I'm on the plane, I'm fine. But like
Yeah.
before I get to the plane, before I like it, I don't know what it is, man. So um not liking that piece, but I'm really excited to get there, be there, hang out with people, meet some new people. So yeah, it'll be an action packed sort of week. But other than that, how are you doing? How are things with you? And then we'll kick it into maybe what one of the trades that I made today.
Dude, I woke up, I looked at the market, I went back to sleep. And then I woke up again, I looked at the market, I went back to sleep again. Like it was I did buy some more spreads in the morning on Google because I just it's the market is so out of touch with everything that's going on right now. I'm just like, oh,
Mhm.
this is a good time to just average down a little bit. I have a 2-year horizon, so it's not like I have any near-term concerns that I have to really worry about right now. So I think the market is just being a little bit irrational. Google had some great numbers. I think we're going into some deflationary environment
I mean,
next
when you were
coming up.
buying those, they were at like you originally were buying them at the probably 125, 130 range. So I'm assuming today you were able to either slightly get down your cost average or
Mhm.
yeah, very
Yeah,
good.
yeah, I brought them down just a little bit. The key is that what happens with spreads is that as time goes on, each leg kind of works a little bit for with your total profit potential and then against it a little bit. So at one point, like I had some nearer term spreads on Google that were like for 2025, those had actually run up from like $9 at one point to like 14. So I was like, oh, I should probably maybe trim a little bit. So I like the last week I trimmed just a little bit to buy some Verizon spreads. But I wish I had done more now that I think about it, but it is what it is. One of the things that you have to do is just make sure you're disciplined and
Mhm.
follow the process that works best for you. So it's not
Yeah, I
too bad.
think it's kind of a two-step like game. It's like you could either, I mean, when things are that down, you, you could always buy back like the covered call, right? The long
Hmm.
call, sorry, the short call, sorry,
Yeah,
and hope that eventually when things kind of go back up that you sell it again, um,
yeah.
to even help out a little bit more. So, but that's all the management piece. I'm curious if there's a lot of people that manage things like that. I'll have to ask TJ, but I don't think TJ really does these spreads. I think he mostly just focuses on one
No,
month
he just
or
does
a couple
covered
months.
calls.
Yeah.
Yeah, he
Um,
just does covered calls.
so for me, you were kind of doing the spread piece on Google. I was doing the opposite. People are probably going to get confused because we probably are talking a lot about bullish calls. I sold what we call a short put. So, you know, if I think it was at the 110 or something like that. I sold a 110, just one. I'm not trying to get too extravagant, but um, because I don't have a lot of cash on hand right now to be able to purchase a lot of shares. So I was like, okay. I was like, if worst comes to worst and Google gets down to the 110 range, I'd buy 100 shares. So in order to get that, I think I got a buck 50 or a buck 55 or something like that. And I think I wrote it for the November or was it December or something like that? No, it was January. Sorry. It was like a January 15th or 19th. So right before the next earnings call. So I was like, I don't necessarily think it's going to dip to the 110 range, but if it does, I'll either double down, write a second short put, or roll it if that's really the case. And if I think it's really going to continue to go down and below 110, but I don't think it will. I think 110 is a pretty good floor price for it at the moment, but generates a little bit of income, like $50 a month between now and January. So it's not that big of a deal. And if worst case scenario happens, my cost basis is $108 on those shares. So, can't complain too much with that. And so I guess for the people that are unfamiliar with how this works, is maybe it's prudent that I pull up like a Robinhood chart, just so people can kind of get their eye into it. For those of the people that don't really sell these things. And I used to do this a lot more, and then I more so focused on the long aspect of things, and so stopped really caring all too much. But when this thing was kind of hovering around the 124-ish, 125-ish range, kind of earlier in the day, that's when I had sold it. And so now that it's at 122, it's probably a little bit more underwater technically, but what all I'm trying to do is ensure that this price stays above 110. And if what I'm basically signaling is if it goes to 110, I'm willing to buy it, or at least do more trading associated with it to, keep the position up in the air. But to me, I think, some people might do these short puts to generate an income. But sometimes the thing that I fear for most people is the thing that's nice about these short puts is you can kind of dictate, what kind of income you want. So, and that can be a problem because then you can get greedy. So you could say something like, for example, you could have been like, there's no way Google is going to go below the 130 mark after earnings. They're going to rocket. And you probably would have sold a put, and now it's at $8. But you would have sold it at, let's just say, $4 yesterday before the earnings came out. And now here you would be underwater. You basically are down 100 some percent on the day. Yeah. And now you're obligated to buy these shares at 130. Well, is that a good idea? No, because your 130 plus your $4 or whatever the premium that you got was now $126. Well, now you can go to the open market and buy it for 122, and you're on a loss. So, is that, it's all about kind of understanding what exactly you're willing to do, what you're willing to buy. And so for me, technically I'm a little bit underwater. I sold mine for $1.50. They're up to $1.80, basically. So I'm down 30 cents on them, but the thought process is, I break even at $108.50. And, the thought process is if it does get down to 110, I'd probably buy it anyway. So it's the same sort of thought process, just in kind of the opposite direction of, say, covered calls, except, covered calls, you own the shares. In this case, you have the cash on hand to be able to buy it. So the collateral is that I have $11,000 sitting on the sidelines. And so it's a way to generate income. If I were to say do that multiple times per year, let's just kind of do it. Some mathematics. I know you can't see the calculator piece, but let's just say if I were able to do this 4 times a year, $1.50 times 100 shares times 4 times a year is $600. Well, if I have $11,000 on the sidelines, I'm making about 5.5%. So is it worthwhile? That's something that you kind of have to justify for yourself, is putting that capital to work at $11,000 at 5%. You could just technically go to the treasuries and get money that way. But to me, the rare chance that Google does go below $110, I'd buy it and ride up. Or in some cases, like for TJ, what TJ will end up doing is, if he does get assigned those shares, he'll end up writing covered calls, because he has to buy those 100 shares at $110. The next thing you know, he's selling covered calls. So anyway, it's a confusing game, right? I think for anybody that doesn't understand options, I don't expect you to understand that piece. It requires a lot of due diligence and relearning the stock market, basically, to understand what options are. And if you're having a hard enough time understanding stocks and kind of the ebbs and flows of people that are day trading versus swing trading versus long-term investing / shorting, take a step back, learn about that a little bit first before you start diving into the options game, because it's like learning it's like learning the stock market all over again.
Yeah. Yeah, it's interesting right now. I think there's just I think there's a lot of money that's being pulled out of the equity markets and kind of just sitting in the sidelines in money markets. Let me just see if I can find the chart for that. The reason why is because if you can get like a nice 5.5% risk-free rate of return and just sitting in equities, I mean, and sitting in money market, you know, the amount of funds people are looking to get into are just not going to be there, right? So
Right.
you kind of want to see more equity flowing into stocks and, you know, indexes and everything else. And usually when that happens, you're going to see a lot of people pulling in, and that's going to help raise stock prices. But right now, a lot of the fund flows are in the opposite direction. So if we look at, let me see if I can find it. Okay, so here it is. This is an older chart, but it's still relevant. Okay, can you see the chart?
Yeah, no, I can.
Okay, so you can see here, this is equity inflows, right? So equity inflows enjoyed by inflows. So basically, if you look at in September of 2022, when we had that run up, so we had a nice jump in equity inflows into this equity funds, and then after that, it's just been constant going down, down, and down until last quarter when we actually saw some inflows into equities again. I don't know what the current inflow looks like, but basically, when the Fed starts to cut rates, what's typically going to happen is that you're going to see a lot more people like start selling off their, well, not start selling off their bonds, but basically they're going to be shifting over from bonds to equities because you need that, you need that return. And you won't necessarily get that with the bond market. I
You're
had to
bad
make
with
sure I
that,
didn't
man.
close it. Yeah, I just have so many tabs open at
I
any
know.
given time. So yeah.
So interesting. So now that we're kind of well, I guess Amazon still reports tomorrow, which I don't know. I'm optimistic because Facebook, I didn't really look too much into it, but I thought that they did pretty well just based off the headline numbers. I could be wrong on that, so please correct me if I am. But stock went down after hours anyway, so it's pretty
Mhm.
interesting that the sentiment seems like things are going down even though they're beating. So maybe my thought that something similar to this was happening kind of in, was it early 2022, when I think in the first quarter people were beating, but even still, just because of the things that were going on in the market, Fed raising interest rates, the Ukraine conflict with Russia, the market just kept going down and down regardless of what was kind of showing up in the earnings report. I'm just kind of wondering, do you think it's going to persist as we go into November timeframe, and then set us up for a nice Santa Claus rally to probably get us back to the 440, 4400, 4500 in the SPY? Or do you think it's going to go a little bit lower, maybe dip into the 3000s on the spot, the S&P 500, before we really do a turnaround?
I'm not too sure. I'm not too sure. I think a lot of this is just bad news after bad news just keeps coming at us. Like July was definitely the high point in the market so far, probably because we had a combination of low interest, well, not low interest, low oil prices, and we had deflation going, like inflation was going down meaningfully. And then of course the Saudis and the Russians, they started doing their thing and oil prices started to rise, and that caused like a tsunami of like people worry that inflation was reigniting again. And so, it's right now, there's just so much global instability. But the good thing is we can kind of see what's happening for 2024 in that I'm seeing a lot of deflationary tailwinds that are coming, which means that I think the Fed is probably going to like cut rates faster than most people are thinking. Shelter especially is the one that, in my opinion, is coming down like pretty fast.
Specifically rental, like rent, or specifically majority of housing, or both?
Rent and housing. I mean, let's do an exercise real quick. Let me share my screen
For
real
sure.
quick.
Have this
And
in the background. I did think it was
okay.
interesting, though. I think it was a myth that's shared that I think home sales in September were up, I think 700,000 sales versus
Yeah.
600 something or so projected. So it seems like the market's somewhat coming back, but based off of what you were kind of sharing, maybe not this week, but last week, generally that's in the millions when you kind of get into the fall time frame.
Yeah.
So the fact that it's still down 30% from norm means that we're kind of in a limited market. My thought process is that just interest rate led? Is that, and so I'm still curious how the supply demand piece is going to happen.
Let's do
cut
let's
rates.
do an exercise. Let's do an exercise. Okay. So we're just gonna pick random places on in the US. We're not gonna be localized. We're just gonna pick random place. So give me a random city in the US.
Whitefish, Montana.
Interesting choice, but okay, Whitefish. Do you have any like thing to Whitefish?
Yeah, I hope it fucking craters so I can buy a house there.
Okay. Well, this is Whitefish. That's fine. No, I agree. Trust me, there's plenty of places that I would love to have that. So one of the things that we're seeing now is, and this is me, I just put Whitefish in Whitefish, Montana. Apparently this house is down $40,000, like price reduction. This one has a price reduction about 150,000. This has got
some price alerts set up, Chris. We might be buying
Yeah.
a house sooner than you think.
Yeah. See, this one's down 61,000. I'm not saying that this is the trend that we're always going to see, but you can see like 50,000 right here, 50,000 over here. And also I think that once we factor in like the number of days in the market, probably that could factor in. But look, this was a $4.6 million property. It's down 650,000.
Look at that Lakeview though, Chris.
I
know
know
you got the money. I know you got the money.
Not after today's Google, bro. No, I mean, eventually we'll see what happens. But yeah. So you can see here, like this house at one point was about 1.4, right? And what we can also do is look historically.
Yeah, I'm
right?
curious
So let's
if it's been sitting.
So
177 days.
Yeah. So let's take a look at Trulia, because I think Zillow actually does a pretty good job of tracking what the price of sales and everything else was. So this house last year, look at this, jumped from $900,000 valuation to, according to their estimates, to 1.7, and now it's down to like 1 point something. So if you look at the price history, whoever built it listed it for sale for like freaking 1.8. They're not getting 1.8. It's down to 1.3. Like I said, this is just an exercise. This is not me picking things. I'm very random about it.
But you're not wrong, because, and I'm curious if this is. I would love to do a further deep dive on this, Chris. Because
let's keep picking places. Let's see which. Give me another.
Somebody
place.
said Huron, South Dakota. So while you're bringing up Huron, I knew multiple people within UDOC that moved to Montana and said, I'm not coming back. And I live in Houston, right? So obviously they unfortunately had to either find a very specialty job within UDOC, which one of them did, but the other person said, F you guys said that we could work remotely. Now I'm working remotely. You can't force me to come back to the office. And so they unfortunately left UDOC. So,
well, here you go. Here's
my thought process is you got a lot of people migrating to those sort of places because now they weren't tied to a specific city. They thought that they could, get a nice paying city job and live out in some beautiful place. Like, anyway, so.
Yeah. So here's Huron. Here's a 10K. This one is about $80,000 price drop. Let's take a look right here. Let's go to
Does this come with all the land? What's the deal?
I don't know. Let me see Zillow right here. So this house right now is in Huron, South Dakota. They have a nice Generac. Nice, it's a decent home. So let's see. This has gone up to listed for sale at $595. There's no buyers right now. It's listed for, what is it, $499? Yeah, $499. So they tried to sell it for $500 because they thought that's what the market was gonna get. So their estimate is actually lower than their current asking price. Look at this. Look at this giant jump from 2020 to this, and listed for sale. $595. No one was a buyer right now. Sitting at $400. I'm not even sure they'll get this. So, like I said, we give me another one. Chat, go ahead. Give me another.
I'm curious, and you're not. Your neighborhood, Chris, right next door. No, I'm just kidding.
I'll do it. Okay, no, I'll show you. I don't mind. Not exactly. I'll put it in my
No, I'm just messing with
I'll-
you.
yeah, let me do Roswell because this is the location. This is like where I want to buy. Hold
Yeah,
on,
curious.
Roswell, Georgia.
What's your social
Right.
security number? No, I'm just kidding. It's
Nice.
crazy that
So
I'm sure you get this all the time. That sometimes people DM you and you're like, Jesus Christ, like, why don't you ask for like my mom's maiden name? What's my favorite
yeah,
pizza flavor? Like, I'll just give it all. Like, you just expect you're gonna get all of it. It's kind of crazy sometimes.
yeah. In Atlanta, we just have a lot of construction of these multifamilies, and they're
Oh,
just
those are
not
nice
getting sold,
homes.
man. Yeah. I'm not a fan of multifamilies like that. I'd rather buy something with like a nice piece of
Look at
land,
that fucking pool.
attached to it.
That's what the missus
Huh?
wants, man.
I mean, I'll show you the house that I really want. I can't afford it right. I mean, I can afford it, but
You can.
it
I know
just
you can.
doesn't make sense. It doesn't make sense financially to go for it. So this one right here, like this house and it's already pending. So someone is actually buying this one. So this is the house that I wanted to get. It's right by
I like
this
that.
really nice park.
I
Yeah.
like those ceilings.
Yeah, it's really nice. I mean, it's gonna be nice for somebody else, but there's a lot of cancellations too, so we'll see what happens. But yeah, it's a nice place. So let's look at it real quick. What is the pricing right here? Copy that. So if we look at on Zillow, right here in 2010, this home was sold for 262,000. It's probably not the same house. Maybe there was just a raw land and then they built on top of it. In 2014, that same house was sold for 441,000, and then it was listed for sale now at almost double for 800,000. And let me just look at the area. Damn, Zillow usually has like a area thing on there. Why doesn't it show that? I don't know why this one doesn't have. Let me do another one real quick. Let's do this nice lake house, probably $1 million. It just got a $25,000 price cut. Like that's gonna do anything.
I'm kicking off a poll just to keep the curiosity
Yeah.
where people think prices are going as interest rates get cut. So
Yeah.
for
So
the
like,
folks who are watching, answer the question in the chat. Do you think prices will go up or down when rates get cut? Sorry, Chris. Go ahead.
yeah. No. So this house was sold in 2010 for 585,000. They listed it for $1 million in August. Not August. Yeah, in August. No buyers, and so they've reduced it down almost $75,000. Just between 2 months. Look at that. That's a pretty big drop. You know, whoever has this house is really trying to sell it.
That's
It's a
beautiful
nice place
house.
too, with a
Is
nice
that where you're looking
pool.
then? You get it. You get it.
I mean, this is the median area. I'm nowhere near close to buying this. I don't need the space. I don't need the giant fucking mortgage at 8%. Screw that nonsense. But the point is that the general market trend that we're seeing now is that prices are actually being cut. I've been looking for houses for the last like 3 years, right? And I can tell you, for the most part, you could not find a price cut anywhere for the
Mhm.
last like 3 years. And now I'm actually starting to see price cuts. So if we take it into context for like deflation, that means that there's probably some deflation coming our way, led by shelter. Even rentals, like right now, if we look at general rents in certain areas, they're really starting to draw down, man. So
Yep. No, I mean, my house, for example, that I just bought, that if I were to rent it, I'd be underwater. There's no way. I'd be a couple $100 underwater for sure. So it used to be where, 5 years ago, you'd be able to buy a house, rent it, no problem. Rents were kind of equivalent and you'd be okay. You might lose a little bit of money if you wanted to hire a property manager or, kind of be more hands off. But, yeah, it would take a couple of years for me to kind of, or I'd have to put a little bit more money down and reforecast the mortgage for it really to make any sort of sense for me to potentially rent out my spot. But I wanted to pull up this because we were kind of referring to the SPY and where we think it's kind of going. So at one point, I think we were up, close to 20% for the year, and now here we are, retracing over the last 3 months or so, really only up 8% year to date, with
Mhm.
being down almost 9% just over the past 3 months. Pretty crazy stuff. Of course, over the past 5 years, we're still up about 50%. And then going all the way back from 2000, which, keep in mind, this was kind of the peak of the .com, we're still up about 200% or so over the past 23 years. But, I'm kind of curious where we end up for the remaining half of the year if we do get back to the 450. I can't believe we almost got to 460. Wow. I was doing a lot of wrestling with my covered calls. I never got anything called away, but luckily for me, and I just kind of kept them rolling. And obviously, you saw once it got to that point, everything kind of started turning flat. But I don't know. Is this, now that I'm thinking about it in some retrospect, Chris?
Mhm.
This really was when people thought that rate cuts were going to happen maybe 1Q of 2024.
Yes,
And
absolutely.
so people were really sitting there being like, okay, we're here, we're at terminal rate, maybe we go up one more, but we're tunnel, we can see the light at the end of the tunnel. And then you started getting this hawkishness from the Fed being like, bitch, say something wrong, like we'll do it, you know what I mean? And they were like, we'll raise it another 1% if we have to. 2% means 2%. We don't mean 2.1%. But my thought process is when you see them do a little bit of a pivot, and this is kind of the tricky game, because next week, I guess it's next Wednesday or Thursday, next week, a lot of people are going to be reading into, what these guys have to say. And if there's a little bit of a pivot, I don't know. You could see the rally of all rallies kind of going into Christmas, the Santa Claus rally of, I don't want to say a lifetime, but I could see a 10% rally if things really start to pivot a little bit. But I don't know if we're there yet. I feel like we would have to wait until a December timeframe and a December meeting before we really get to a point where they quote unquote pivot.
I
And
don't think there is any more rates coming. I don't think they're going to raise any more. All the data is pointing, like Bill Gross, like I was following Bill Gross, Bill Ackman, everyone that I know, and every data point that I'm looking at is pointing towards massive, massive amounts of deflation in 2020, 2024. And so one of the things that's happening is the Fed has always been backward and they just keep living up to that goddamn thing,
yeah,
which is they keep looking at backwards data for forward guidance. And yeah, man, I'm seeing rate cuts happening sooner than everyone else. Like I'm seeing, like my projection on rate cuts have actually gone to probably like March, and also my rate cut target for December and November, I think there's no raises. They're gonna just flatline it. Once the shelter numbers start coming out and the shelter CPI number, real shelter CPI comes out, it's going to be pretty significant. Like it's pretty significant on the downside. So, just.
and I think the thing is like we're getting into a place where oil demand is going to be down seasonally. So you'll probably see some easing of prices there. You're going to have auto prices have been I've been seeing some crazy auto deals just coming off the lot. Whereas before, 18 months ago, 2 years ago, you couldn't like wish yourself into a car. You'd have to pay 15 over asking. And if you wanted something that was actually really nice and really in high demand, good luck. They would lie to you. They'd say, it doesn't come with semiconductors anymore. Like I remember my mom was just like, yeah, the seat warmers aren't working. Like I have to go back and get the semiconductor chips installed. Like later, I'm like, what the fuck is this? Like this crazy. Anyway, but I think that there is some deflation going on in specific markets at the moment. Like rental for sure. I've seen that firsthand when they tried to get me to stay in my current apartment. And just some of the things that I saw, like just, rents last year were pretty crazy when I renewed my lease for this place. The Instagram reels that I'm seeing for Houston for some of these places are back in like the 1100 range. And I'm like,
Mhm.
what? Like 1100s is kind of the stuff I was seeing 5 years ago, right? Like, so some of these places, and we're not talking about hood, right? I'm talking about
Mhm.
decent, young, urban areas that, have a lot of young professionals in them. I'm not talking like where the hood is, because there's hood in Houston, and you obviously,
Mhm.
I don't normally go in those parts of town, but it's it's astonishing. Like good parts of town, medical district, Heights area, and I think a lot of it has to do with what you were talking about, which is that continued multifamily construction. A lot of it is now coming online to the point
Yeah.
where there's just a lot of supply, and a lot of people are kind of staying put or staying at home compared to getting their feet into the market.
Yeah. I don't know if you saw this too, like how much subprime. Let me just share this real
I know
quick.
you shared
Subprime.
something, yeah.
Some Okay, so this is the auto loan market for subprime. It is nuts the amount of what is that thing called, delinquencies that are happening right now. Like it's beyond what it was in the great financial crisis. So auto loans right now, a lot of them are going to be coming up, in which case there might be a lot of repossessions coming our way. So it'll be interesting to see what happens.
It's
But
way more
a lot,
seasonal than I thought it would be. It's pretty weird.
yeah, yeah. I mean, I'm sure that no one wants to be without a car during the winter, so maybe it's different. I don't know, but the point that I'm just trying to make is that we're getting back to the norms of where the credit cycle is and where everything is going. So this is what's awaiting us. So if a lot of these cars end up coming our way, struggle to afford a car, delinquencies rise. If delinquencies rise, you're going to have repossessions, and if repossessions come in the market at the same times as other used cars and everything else, it's going to, that's going to make the prices of the cars drop. And then also trying to get a new car sales done right now, it's probably super difficult because getting financing is hard at a what, 8, maybe 10% on a car
Yeah,
note,
yeah.
you know?
What is considered subprime? 600 or below credit score?
I think it's like 660.
660
Um,
sounds like a good round number that I feel like I hear a lot.
prime credit rating. Let me see. I don't know. I've been in the so any yes, anything that's a 580 to 620 is subprime.
What
Well,
about
that's
below?
deep subprime.
Yeah,
Let me
what
see.
about
Hold on.
below 580? You feel like you can go
Okay.
below that?
So according to the FDIC, the bar risk is right here. So if you see this, if you have anywhere above anything above 660, you're prime credit. Super prime is if you're like 720 or above. So like I have like 815. You know what I'm saying? You know what I'm saying? But I have an 815 credit score. Prime is 660 to 719. Near prime is 620 to 659. Subprime is 850 to this. And if you have deep subprime, bro, I don't know. I don't even know if anyone is going to give you that.
I'll say always make sure that
My
you
headphones died.
always make
Forgot to
sure you
charge
have
them. That's
um, really good credit. And reason being is like when I went to go apply for my mortgage, they literally they were like, "You want to close early? No problem." They're like, "How quick you want to close?" I was like, "I don't know, like 20 days." So like, "No problem." And they like made it happen. They're like, "We'll move all the stops." Maybe it's just because they don't have a lot of mortgages going on, but also they're like, "We've done they literally looked at my stuff 10 months ago. Nothing's changed. Um, I have a little bit more, I guess, assets than I did back then. I have a little bit more cash on hand than I did back then." So they were like, "Whatever you need, man. Like, let's just go." And plus, the house that I bought is way below my means. Like, I didn't buy it to live in forever. I bought it because I know that there's probably an assignment, that might be coming up where I have to go international, or I have an opportunity when rates get cut to buy a better home, something like that, where I didn't want to buy a forever home. I just needed to get out of an apartment and start building equity in something. So anyway, just yeah, it's just an interesting time. But I am kind of curious what eventually is going to get them, and what's their rhetoric going to be next Tuesday, Wednesday. And I guess my question is have we gotten to a place now where some of this deflation in certain sectors Well, I don't know if there's been too much deflation, but there's been a lot of disinflation in a lot of areas. But there has been some. I'm trying to think of ones that we've actually seen deflation, which I guess is technically the oil sector, energy sector. We've seen some deflation, but in other areas, or have we built enough of a track record of disinflation or deflation in these sectors where it's actually going to start showing up in their notes and in the data that they're kind of seeing, where they would? Your mic is muted or off.
There we go. So let's take a look at each category. Okay, so food and beverage right now, you can see that this is, it's deflationary. If you, well, it was deflationary, like food away from home, which is like food at like restaurants and stuff like that, right? So that was in deflation mode. So year over year was down 5%. Food at home recently was down about 0.78. So not much. So it's flat. So this is like disinflation.
I feel like that's such a long way to go still, personally.
Yeah. For what? Food?
Yeah.
Yeah, I think so. I think food never really grows that much, but there are times where things will violently go up and violently go down. It's just how commodities sometimes work.
Yeah.
Where okay, so here's an example, like chicken, right? At one time there's a bird flu epidemic that like killed like a third of like the chickens in production. So the price of chicken just skyrocketed, and
Well,
then
it was
there's
like eggs last year. Yeah.
yeah. So, when it comes to food, that's why food is not the greatest like metric to use when it comes to tracking inflation, because it can be volatile, right? Housing, on the other hand, housing's been pretty much a straight line down. There have been some blips here and there for other lodging, but that's like that's not really like conducive to think about. But if you look at it overall, like rented dwellings are flat year over year and actually somewhat negative. So if you look at the general housing is about 2.76, which is like historically normal.
Yeah.
And so with the price cuts and everything else, like in a weak shelter environment that we're probably going into, this could deflate down to like, zero next year, where the price of homes can actually be lower, in which case now that ends up being deflationary. Right. So that's housing. Housing, I think, is the biggest one. It's also one of the largest components for core, which is what the Fed is tracking. Transports. So if you use like autos, like car values and stuff like that, that's like pretty flat year over year. Some of them, like gasoline, was gas, dude. Gas really helped lead the way to deflation, like disinflation, early in January. Look at this. It was, compared to last year, down almost 30% in July. And because of like recent price hikes, like the oil prices, that had spiked back up to like 5%. So gasoline was one of the things that led us into disinflation earlier in the year, especially around July. But that move upward really screwed us over. But what you're seeing now is that prices are coming down a little bit, so that kind of helps. But overall, on transports is about 2.5, which is what the Fed's target is. With a lot of used cars and everything else, maybe this is actually going to go down deflationary also. Utilities are actually now back to being flat again, thanks to natural gas prices.
Yeah, might actually go down. Yeah.
Yeah. So if you look at natural gas prices compared to last year, they're down 14% year over year. And so if you think about like heating and all the other stuff, they're down. So
it's still cheap.
Last year, electricity prices were 14% higher than the year before. That has come down to like flat, which is huge. That's disinflationary. Healthcare is, I don't even know how this happened, but healthcare is down 2%. So this is in deflation mode. This is in deflation mode. Household and daily items, which is, I'm not sure what, like just regular stuff is still a little bit higher, but furnishings, like what is that thing called, like furniture and stuff like that, that's in deflation mode right now. What's going higher? Household operations. I'm not sure what household operations is. Alcohol and tobacco, people are smoking less, drinking less.
Hell yes.
Hell yeah, brother. Clothing is in line with inflation at 2%. Communications is pretty flat, so cell phones and stuff like that. That didn't really go up that much anyway. So
yeah.
Residential phone service. I didn't even know residential phone service went up that much. But
voice over IP.
Yeah. Education's pretty flat. So What's reading? It costs money to read? I don't know that.
Books, I guess.
I don't know. Whatever. Recreation. Yeah, recreation spending is pretty flat year over year. Let's see. Other entertainment is flat. What is actually up? Fees and admissions. So more fees are in our
Because that's
yeah,
StubHub and stuff, I guess. I don't
I
know.
guess, yeah. But
Interesting.
overall, like according to Truflation's data, which I'm not saying is gospel, but according to them, and I do believe a lot of the data is pointing towards this disinflation environment. So if you look at July, July is when we saw the most amount of disinflation. That was like 2.23%. We're literally right there again. We're back to 2.3%. So I think if this holds true and this momentum keeps up, we're likely to see the Fed pretty much like surrendering and just saying, you know what, I think we're good. If the
But,
data comes up.
but I guess my question is for you. You heard them. 2.3 isn't 2.0. And
I
so
know.
do you think that they'll eventually come off that rhetoric of 2.3 is getting there? We know that everyone's hurting. Because my fear is that they let up too easy. Like you were saying that you think by March, April, they're going to start cutting. And I
Yeah.
just feel like if that's the case, we're going to end up in this seesaw. And it's like, do we really want to seesaw, or do we want to find a spot where, well, I guess we might always seesaw. If we time everything appropriately, we would be seesawing, right? We'd go up half a point, wait for a couple of months, maybe 6 months. And then if it's bad, cut a quarter point. I don't know. I mean, is
I
that
think I think
really the
I
way to
think
go?
the way that they'll drop it is very 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 slow. They're going to be very slow and methodical. The one thing that does seem like the thing that could really push them really into further cuts is probably that one, it's an election year, and even though they say that they're not political and all that nonsense mumbo jumbo, there is some pressure from Washington to kind of keep rates somewhat
For sure.
tamed. And also at the same time, just the national debt, dude, our cost on interest on that debt is just ballooning.
Being close to a
You can't,
trillion if it hasn't passed it already.
yeah. So you can't let the entire economy get screwed over just because like it hasn't met your exact targets, that you needed it to get there. So, and not my thing is, I think we get to those targets. By the way, I think that we'll be under 2% inflation by January, February, once
Think
the
so?
real data starts coming out. Like remember, CPI is always looking backwards,
Mhm.
right? So the more the data comes out, I think the next maybe like 4 months of data is really going to show a lot of disinflation and
Mhm.
possibly even deflation, depending on which categories are being measured. Housing, especially in my opinion, is probably going to be lower because seasonality might have impacted some of that shelter growth that we saw in the summer because there was still a lack of inventory and then there's still people like willing to buy. So like right now, what we just saw was was that total home sales number. But what I think we're going to see is in December, usually what ends up happening is wintertime, there's not as many people looking to buy houses.
Yeah.
But I'm sure that there's going to be a lot of people still willing to sell to get away from housing. And I think that is going to be the thing that really drives it home. So January, February, maybe March, we'll see like shelter, maybe even go negative. Who knows?
Hmm. I am curious though. Do you have that still open about what's the seasonality of inflation and housing? I know it obviously on a typical basis, like you said, it is seasonal, right? There's spring kind of brings buyer season and it kind of ceases once school starts in the you know end of August, early September timeframe. But I'm curious, like, is it always kind of cycle between 1% and 3%, and with the median being 2% or 2.5%, or is it something that is a lot more cyclical than that?
Well, let me pull it up. Let me show you what I mean by that. So, home sales, median sales price. 1 second. By the way, to all of our viewers, if you ever want to look up good economic data that's free, you could always just go to the Federal Reserve's published data.
Yeah.
So all you have to do is just type in Fred, and then after that, or type in whatever data point you want to look at, and then put in Fred, and you'll be able to see what it is. So like this right here, like existing home sales, right? This is existing home sales for the last, I guess, year. Some of the data points are further back, and some of them are not. Let's see, home sales median. Okay, so this is the median sales price of homes going for the last, however many years you want to look at it. So this is what the typical home was, like median sales price of homes. Like in 1990, we're like 120. That has gone up. That went up to in Q4 2022, like 479. Ever since then, median home sales prices are down. The better thing to do is look at it on a year over year basis. Let me see, year over year. Existing home sales. Existing home sales. Let's see. Okay. Man, sometimes the data here is housing inventory. Existing home sales. Man, where is it? Monthly supply of housing. Usually this is a good metric. Monthly supply of housing. Usually when you have, let me see. Hold on 1 second. 1 second, Matt. Let me just stop sharing for a second.
Well, Chris is bringing that up. One of the things that I always like to check specifically, because this is part of it as well, right? The Fed balance sheet. Believe it or not, we're actually below 8 trillion on the Fed balance sheet, which I thought was pretty surprising. You can kind of see this is really when the Fed started using, and Chris, I guess is whenever you're ready to let me know, but this is something I always like to look up because it really started to kick off when we started doing the zero interest rate policy back in 2008 timeframe. And I didn't fully understand like what was going on. And I just assumed that this was something that was kind of like normal. And I finally realized over, 5 years or so after investing that it's not normal. And like, obviously you don't want to have anything held on the balance sheet, but obviously during the pandemic timeframe in 2020, that's when they started to get a little bit more aggressive with it because they just wanted to make sure that, the economy didn't stop overnight. There was a lot of crap going on. Oil prices went negative. The stock market went down 30% in the matter of a month. Everything was kind of going a little bit crazy to the point where we topped out, basically starting at, and this is the repo market started to get a little crazy mid 2019. And so that's why we actually started cutting rates earlier than the pandemic. But we went from like a balance sheet of 4.1 trillion to a balance sheet of about 8.9. So we added about $5 trillion worth of debt. And then here's where we started having some banking issues earlier in 1Q this year. But now we're actually, believe it or not, below 8 trillion again. So haven't been this low since June of 2021. So 18 months ago. So hopefully we'll continue down this sort of path. And who knows, maybe we'll be below 7 or 8. 7 trillion, I guess maybe in the next, I don't know, year or so. They're decreasing by about, let's just see, mid-April, 8.5, 100 billion or so, 75 billion or so. It looks like it
just rolls off that debt,
Yeah, and I think that I want to note something, and I'll hand it over to Chris. A lot of people think that they're selling these. They're not selling. If they sold $8 trillion worth or $7 trillion worth of bonds, they would kill the market for years, right? Yeah. So what they're doing is they're letting it mature and they're letting it roll off the balance sheet and they're not buying anymore. Whereas before they were buying, it was like 80 to 100 billion a month, Chris. That's what was keeping the fact that interest rates are going this crazy, it's kind of twofold, right? It's, before when they were holding the balance sheet, that means they were letting things roll off, but then they were using the proceeds to buy more bonds, right? To kind of help keep things kind of deflated. You're not buying any more bonds if you're letting it roll off like we are now. But throughout 2018 and stuff, like we were still buying a slow amount of bonds every month versus, during the pandemic and stuff, we were buying 80 to 100 billion dollars a month. It was insane. Anyway, back to you, Chris.
Yeah. So this is the active inventory of housing in the United States. So you can see here, seasonality wise, it usually goes in the summertime. So this was in July of 2016, a lot more active listings. And then the listings usually tend to drop off in January, right? And then they start picking back up again in August, they come down again. So we've generally been on like a downward trend And then really after COVID just supercharged this inventory drawdown. So you can see here, even in March of 2020, people were not like, hey, you know what? I'm not gonna buy a home. People were just buying homes up, and not a lot of people were willing to sell. So inventory levels really cratered to the lowest amount, which was in February of 2022, when there was only 346,000 homes in the United States for sale. And that was like peak, just huge levels of demand, but very little supply. And so because of that supply and demand dynamic, you ended up seeing a lot of construction happen. And the year after that, we had a lot of homes start to go on the market. And here in October, there were almost $700,000 homes, 700,000 homes for sale. And usually what happens is the wintertime that decelerates and comes down. And so it came down to March of 2023. So you see this peak. You see this valley right here of
Trough, yeah.
346. This year, there was almost double the amount of homes in the market for sale at the same time. And I think when we look at the March data, it's going to be somewhere around here. It's probably going to be even more. So it's eventually housing is going to correct. And it's actually because there's a lot of inventory that's going to be coming on the market. And yeah, that should help tame prices a little bit. And maybe we'll see some price cuts. There's a lot of new home construction that was pushed forward, with a lot of builders pretty much financing the deal, saying, hey, listen, we'll give you a better rate than the banks would. So they've been doing rate buy downs and stuff like that. So it's a very interesting. Yeah.
It's crazy. So the house thing for me is new. Literally, I knew that there was a development going up a block and a half away. And I was like, okay, cool. They're starting to sell those homes probably like 10 or 15% more per square foot. So I was like kind of happy about that. I literally took a drive because I'm getting packages, and we're going to Vegas this week. So it's like I'm trying to time moving some small stuff in the apartment. Some of the artwork's off the walls. Other things I've kind of moved. Some of the outdoor furniture that I have on the patio out there moved over to the new spot. So like I'm starting to move small things. But I was driving home and I was like, let me take this road, because it's in an area where I might, buy a couple houses and sit on them because they're knocking them down and putting up new homes or townhomes if there's enough land. And so could be a good opportunity to buy something, knock it down in the future and build homes. So I take a left out of the development instead of a right. And there's a whole new fucking development literally within the last 2 weeks that they boarded up and got the 2x4 frames and everything up. And I'm just like, Jesus, man. Like it's crazy. Luckily they're bigger than mine. So, probably, and they look a little bit nicer. So we'll see. Hopefully, it raises the property value near me, but I'm just astonished at how quickly some of these developments can go up. Anyway.
Yeah. Thoughts. No, so like I said, it's an interesting dynamic that I think is going to play out over the next couple of years. But I think the most interesting thing is just a lot of the people who were really really short on long duration bonds, they're all starting to cover their positions now. So that leads me to believe bond guys are usually pretty much with it. So my guess is that is like an indicator that we're likely to see some meaningful drawdowns in inflation next quarter, in which case then like the need for additional rate hikes is going to go away. And if the rate hikes don't materialize, and then we could see some rate cuts. So we'll see what happens. Yeah, I think 2024 is a good year to be in the market. You
think so? Well,
maybe not the early part of 2024. The early part of 2024, we might see that recession. So
I was going to say, generally speaking, 6 months up to an election, you always kind of want to be in the market, right? I think it's always election years are always typically historical returning sort of years, regardless of who wins, whether it's the left or right. So, and then I'm trying to think, is it 18 months after an election as well? And then generally it gets a little. I'm trying to remember. Anyway, I have to look at the cycles again, but yeah, I think one of the things that somebody mentioned, and we had a stream all about it yesterday. They wanted a little bit of a highlight about Google. So Google specifically, and if there's any other questions, we can end on maybe one or two questions. And then I know we're getting close to an hour, so I'll let you go. But what was I going to say? Google specifically, man, I just think it's a really good opportunity. They missed on cloud revenue, which I
Yeah.
think is right now what people are investing in Google, maybe paying a little bit more of a premium for. So I think without a lot of this cloud, you'd probably see Google back at the 16 to 20, like you saw kind of at the end of last year in 2022, time meaning 16 to 20 multiple. Versus now, you're kind of in the 20s range, 20 to 22 range, I think is kind of the multiple that they're trading at. So I think that that's being challenged again. But I think that this is a matter of time, when you kind of get a few more annualized, growth rates in for the cloud business, in a not so restrictive environment from a business perspective. I think things will be okay. I think the fact that they're growing even at 20% per annum in the rate environment that we're in the economic environment we're in, where people are truly cutting costs, like the oil industry is a prime example of this, making money hand over fist. But I've never seen so many people pinch pennies in my entire life. It's like,
Yeah.
and it goes to show, it's because you went from $50 oil to $150, well, not 150, but $130 oil. And then you pulled back by 35%, 40%, just like we've seen over the last year. So to us, it's like a recession, right? You think about it in that respect. It's like you see your earnings literally double, triple, and next thing you know, they're going down 30 odd percent. You're going to want to make sure that you're pinching pennies. I think a lot of companies, I don't want to speak on my own company, but a lot of companies were thinking that oil was going to stay above 100 for quite some time. So they started moving that way. And so now, and I think maybe some of the other people planning like this, Google's a prime example. Amazon's a prime example of people that literally their earnings went up 60% year over year. And we're talking about companies that are making tens of billions of dollars, on the brink of making hundreds of billions of dollars in net income per year. So the fact that they were able to grow so massively during the pandemic is a testament. And so when you have to shape an organization like that, it's hard to, on a dime, make it. When you're growing, you're not efficient. When you're efficient, you're not growing, right? And I forget who's famous that said that, but it's the truth. So you have to play this fine line where Google, when I first started investing in them, I think they had like 90,000 employees.
Mm-hmm.
And from one quarter to the next, I shit you not, maybe it was, I think it was like one quarter to the next, they went from 150,000 employees to 170,000 employees within a quarter. And I was like, oh my God. So this was like in the beginning of the year, I think. And I was like, no wonder why they want to do layoffs. Like they grew their earnings and revenue massively, but the hiring just kept going. It was like as if the hiring never stopped. And so when everyone was talking about efficiency at the beginning of the year or late last year, it made sense, because of like, you have to think, there's a lag effect, just like with anything. You're not going to be, as soon as you start seeing the pandemic hit, you're not going to go out to the market and start hiring a bunch of people. Like, it just didn't make any sense. So, it took a few quarters for people to be like, oh crap, like this work from home thing is sustaining. More people are ordering instead of going to the market in person. So we have to hire a bunch of people. So I end up hiring a bunch of people. More people are watching YouTube. More people are. So, and now the reverse is kind of happening, where things kind of slowed down to single digit growth. The fact that you didn't really have too much anemic revenue growth in a lot of these companies, specifically the Magnificent Seven, is absolutely wild. And so the fact is, I think now we've got back to a normalized rate. Because if you look at like the e-commerce is a prime example of this, where it went from 10 or 11 or 12% of total US sales in 2019 to 2020, it went up to like 16 or 17. And then in 2021, it kind of started to tail back down. Now I think we're back to like 13 and a half or so, 14%. And now we're kind of going up with that very sturdy trend line that's been developing since the early 2000s. And so I think now you'll start to see, as we already have with Google going back to double-digit revenue growth, Microsoft going back to double-digit revenue growth. I think the single teens revenue growth in terms of percentage is over for the current time frame. I think that now that we're kind of back to steady-ish growth, and they've kind of pulled the collar a little bit, I think that they'll be okay with low teens growth and then supplementing that revenue growth with buybacks, I wouldn't be surprised you still see these companies growing at 15 to 20% a year for the next 2 or 3 years until something massive happens. I feel like there is going to be some sort of recession that isn't at all associated with what we're talking about today.
Yeah, I mean, I'll be honest. One of the issues that I'm a little bit concerned with is just geopolitics with the whole Israel Palestine thing. I honestly thought the Israelis would have backed off by now, to be honest. I know that this was a big thing, but it seems like all over the world there's so much public pressure against Israel. So in the past, there wasn't nearly as much, like, what's the word, as much protest. I know that the nature of what's going on is really egregious, what happened to Israel, and I'm sad to see like such crazy amounts of human life, but at the same time, like the bombing campaigns in Gaza, like every day you're seeing, I think almost double the amount of people have died in Gaza, and like you're seeing these pictures of destroyed buildings that can't do well in terms of public opinion to be on Israel's side. So it's one of those things that I wonder what's going to happen. Will Israel actually go into Gaza, and what will be the trigger for the rest of the region? Like, what are the Saudis going to do? What are what is UAE going to do? What is Qatar going to do? Because all of them have threatened that basically they'll cut, as all sorts of all sorts of things that they can economically if Israel were to go into Gaza. So what happens to us? How's everything going to happen? So I don't know. Like, that uncertainty is not good for the markets. So I don't know. I do, however, think that we are in a good place with earnings actually outperforming, but the market not recognizing it. So we'll see what happens. U.S. just passed a bill to sanction Iran again. Yeah,
It's interesting, man. I'm not nearly educated enough, and even when I put these disclosures, I got still reprimanded by people. It's like I don't even want to speak on it because it's too political. One, and two, I'm just not educated enough on it to feel like I could bring any sort of justice to the situation. And three, there's no reason for me to be involved. So it's like I just hate the fact that there's any sort of death going on in the world. I'm not educated to know who's on the right, who's on the wrong, and literally, the fighting has been going on for millennium. So it's like it's a tough situation. I just hope that everyone kind of comes to an amicable term, and more people are able to stay out of harm's way and not die. But the thing that does scare me is this continued turmoil, whether that's in Ukraine, whether that's in the Middle East, and hopefully not Taiwan. I don't really like seeing the US flexing their muscles in the Middle East and going to the Mediterranean Sea. I don't like seeing China do the same, because that just makes me feel like there's ongoing conflicts between the US and China, and something might arise that just unfortunately unravels into something like World War III, which I do not want to see. But I did have a question up, and I know that you are very knowledgeable about it, kind of bringing it back to reality, bringing it back to finance, which geopolitical issues are very important when it comes to the finance piece. I'm just not educated enough to talk about it. GOOGL versus GOOG. I know
one
what the
is voting
is.
shares, the other one is non-voting shares. So
yeah,
there's really, to be honest, there's really not much difference, because there's another class of shares that has super majority voting rights. The only thing is GOOGL has more volume. So that's the one that you typically want to buy.
Yeah. And so I guess for some people, the voting rights thing may or may not matter to some people. For Google, it literally doesn't matter. Just like Palantir, it doesn't matter, because I think Sergey and Larry, I think they still own over 50% of the voting rights. Or is
they own, they like their shares like are super majority shares. So no matter what, at the end of the day, they're the ones that are in control of it. So board decisions and everything else are just under them. So it's not, voting rights don't necessarily matter for Google shareholder classes. That's why they pretty much trade in line with each other, with maybe like a little bit of a difference here and there. But for the most part, you want to stay with the one that has the most volume, and GOOGL has the most volume. So
that's what I hold it in. I don't know. I've always thought it was interesting how they did the GOOGL and the GOOG share split. And originally I was like really scratching my head. I was like, this is really strange. And it kind of makes things a little difficult because when you look at the NASDAQ 100 or you look at the S&P 500 ETFs, it's like now it makes it so there's multiple like it's not 500 companies, it's 502 companies. I forget what other company has 2 ticker listings, but it makes things a little bit more difficult in that sense. Not by much though, but I think there's a lot of companies out there that do something like this. They manipulate the shares just so that they can maintain control. Palantir has done it. Multiple people have done it. I don't know. I know Dutch Bros has 4 different layers of shares as well.
Yeah.
And so I think a lot of it is just to make sure while people can cash out of the business, that they're still able to maintain control. Because look what happened, and this is, I think, all based off of learning, through history, what has happened. Look what happened to Steve Jobs in the late 80s, right? Where he got out and they brought in the Pepsi CEO. And obviously, Jobs did something great, right? Because it was Pixar that he helped develop. I forget which one it was. And then that ended up being bought, and it has done really well with Disney. So, and then I started Nextstar after Pixar. He did Nextstar, I forget what it was, but he started another company, and then that I think eventually got bought by Apple, and that's how Jobs ended up back at Apple. And obviously, the rest is kind of history up until 2008 timeframe. So, think people saw something like that, and they've seen multiple people that unfortunately make that sort of mistake where they give up too much share control, which is why you kind of see people like Alex Karp and some of these other people that have too much shares, like pretty much saying whatever the hell they want. Like Alex Karp, the board can try to remove him, but he has so much voting shares that
that's never going to happen.
Him and Thiel, I think, own, I don't know how much, but 50.
They control everything. It's the 3 that control everything. Number 1 is Alex Karp, of course, but then there's also what's his name? Peter Thiel, and he's the president of the company.
JT?
God, I forgot his name. But basically, between the 3 of them, they hold super majority share, so they're not going anywhere.
Mm-hmm. All right, man. Well, I appreciate you staying the extra 7 minutes. I'm glad you didn't have to rush off like last night.
It'll be fun tomorrow, man. I'll see you tomorrow for dinner. We'll see if we can do a stream tomorrow, just like a quick one.
Yeah,
that'd be fun from either the hotel room or from the strip.
Something like that. Yeah, I mean, it doesn't take much to set up a live on your phone. So even if it's just like a quick 5-10 minute where we're just shooting the shit, talking to Amit and friends, it'll be interesting, man. And if anybody's out in Vegas, let us know. Reach out. I know June's going to be there. A few other people are going to be there. So I'm really looking forward to meeting up, having a bunch of coffee dates, hanging out and learning. And the thing that I love most, I said this today at work, and I believe it's so true. People are like, thank you for coaching. Like, thank you for doing this. Thank you for doing that. And it's like, dude, like when you're able to teach or help others in any sort of shape or form, it allows you to sharpen your own craft. It allows you to understand and know who you are. Because sometimes when words come out of your mouth, when you preach or when you coach or when you're like, shit, I'm not doing the best at that. Right. Like I'm saying it and like monkey see, monkey do. Right. So it's like, am I really talking the talk and walking the walk, or I need to touch this up here and tighten that up there. So, when you have these sorts of opportunities, it just allows you to learn a lot more. So, much excitement, and we'll hopefully be able to get a nice. I don't know what he means by free you. I'm so confused. Anyway, all right, my man. I'll
if you haven't liked and subscribed, please like and subscribe for us. We're trying to grow the channel, so that'd be much appreciated. Thank you.
You guys rock.
Yep.
Subscribe to Chris's Patreon. See you guys later.
Bye.